Your first $100,000 has almost nothing to do with intelligence. It has everything to do with behavior. Because the truth is, the first $100,000 is the hardest money you'll ever build. Not because of math, because of psychology. And once you understand why, everything changes. $100,000 feels so slow. Let's look at numbers. If you have $5,000 invested and earn 8% annually, that's $400 per year. That doesn't change your life. Even at $20,000 invested, 8% is $1,600 per year. Still not life-changing. This is why the first phase feels pointless. There's no visible momentum, no dramatic growth. Every dollar feels like it comes directly from your effort. At this stage, wealth is built by contribution, not compounding. And that's where most people quit. Intelligence versus discipline. Here's something uncomfortable. Smart people often struggle more in this phase. Why? Because intelligence creates over-optimization. They try to time the market, switch strategies, overanalyze ETFs, jump into crypto, start trading. They want acceleration. But the first $100,000 doesn't reward cleverness. It rewards repetition. Disciplined people invest monthly, increase savings rate, avoid lifestyle inflation, ignore noise. There's nothing exciting about that, and that's exactly why it works. The real equation. The formula is simple. Wealth equals income minus expenses times investment rate times time. But here's the key. In the first $100,000 phase, savings rate matters more than returns. Let me show you why. If you invest $1,000 per month for 5 years, that's $60,000 contributed. Even with average returns, most of your portfolio is your own effort. The market isn't doing the heavy lifting yet. You are. That's why discipline is everything. The psychological wall. There's a dangerous phase around $20,000 to $40,000. You've made progress, but compounding still isn't impressive. This is where people get bored. They want faster growth, higher returns, excitement. So they trade options, go heavy into crypto, try stock picking, leverage aggressively, and often they reset years of progress. The first $100,000 is less about math. It's about resisting self-sabotage. What changes at $100,000? Now, let's look at numbers again. At $100,000 invested, an 8% return equals $8,000 per year. Now compounding becomes visible. At $200,000, 8% equals $16,000. Now the system starts working for you. Notice something important. Your behavior doesn't change, but the impact of compounding does. Momentum appears, and that's when wealth feels real. Why discipline wins. Discipline means investing when it's boring, investing when markets drop, increasing income consistently, not upgrading lifestyle too fast, ignoring social media finance noise. It's not dramatic, it's not viral, it's not exciting. But behavior compounds just like money. The disciplined investor eventually looks intelligent. The impulsive investor eventually looks unlucky. The identity shift. The first $100,000 forces you to become someone different. You move from consumer to owner, spender to allocator, reactive to strategic. That psychological shift matters more than the money. Because once you reach $100,000 through discipline, you've proven something to yourself. You can build. And that identity scales. Now a practical framework. If you're building your first $100,000, 1. Stabilize your finances. 2. Target a 25 to 40% savings rate. 3. Increase income aggressively. 4. Automate index investing. 5. Avoid speculative distractions. Simple, but not easy. The first $100,000 isn't about brilliance. It's about behavior. It's about consistency. And most importantly, it's about resisting the urge to speed things up. Because once you reach it, compounding finally becomes visible. And from there, the game changes. Play long. This channel isn't about fast wins. It's about steady progress. If that's the kind of mindset you are building, subscribe and stick around. Please like the video if it gave you more perspective. It helps this community to grow quietly, just like growth should. See you in the next one.